So have you ever wondered what happens to your mortgage after it has funded? Basically, with the question I've been getting a lot about how and why the COVID-19 pandemic has been impacting the mortgage industry as much as it has, it is going to require just a general understanding of what happens after a mortgage loan is originated to kind of better, grasp the concept of all the different, guideline changes and why the mortgage industry is experiencing a liquidity crisis and what that even means, right? But bottom line, to start from the beginning, and again, this is a very simplified definition, but when a mortgage loan is originated, what happens to it is it's going to go to a servicing company. So servicing companies actually will purchase the servicing rights to a mortgage loan. And so they would collect the payments, make sure that the investors who have bonds tied to those loans on the back end are paid. And so they're kind of the middlemen just servicing that loan after it's funded. And of course, answer questions, pay for taxes, insurance when they become due, if you have an impound account, etc. But the servicing companies don't own your loan, they just own the servicing rights to it, and they get profits through servicing that loan for a certain period of time. And so the people who own your loan, mortgage companies and mortgage banks, will actually sell the loan to aggregators and agencies such as Fannie Mae, Freddie Mac, Ginnie Mae. And what they're going to do is, again, bundle up loans together in like a rubber band and get them into the hands of an investment banker, where at that point they will convert them into mortgage-backed securities where the general public will actually buy them. And so actually even mutual funds and 401ks, all these different financial portfolios will include mortgage-backed securities as an asset. And so that's kind of the process of where your mortgage goes after closing. And so why is this important at all, right? The servicing values of mortgage loans being originated at the moment have been cut in half due to everything going on in the economy. And the servicing values, what that means, will kind of go back to that first step. So like I mentioned, the servicing company will service the loan and most likely will buy the rights to service that loan. But what happens after they gain the servicing rights to a loan? Again, they're collecting payments, paying the investors on the back end, but if in a time where, again, COVID-19, 1,100%, that's the increase in forbearance and deferment option inquiries that the mortgage servicing companies have been experiencing. So that means a lot of people all at the same time are not making their mortgage payment. And why that hurts the servicing companies are because the servicing companies still need to pay the investors on the back end, whether or not the families who own these loans or who got these loans are repaying the mortgage or not. And so even if the family is in a forbearance agreement signed and everything is all, completely legally okay, the servicing company is still needing to flush out of their cash reserves to pay the investors on the back end. And so the actual volume of people all at the same time not making mortgage payments has been hurting the servicing companies very hard. And they are part of the entire mortgage banking system in which all the companies operate. And so now let's look at it in the perspective of the mortgage companies. Now, mortgage companies have a net worth, right? And their net worth will determine how much they can fund and how much they can actually originate loans for. And so basically, a big portion of their net worth is going to be made up of servicing values. And that means with all these loans they're closing on, each one of those loans technically has a value in which they could transfer the servicing rights to a different company. But now that the servicing companies are seeing the trends and seeing all these people not making payments, they don't want to get any servicing rights to any loans at the moment. And so what happens then is the mortgage companies who originate the loan, and in some cases they do keep the loan, but this impacts everybody because one, their net worth just went down tremendously, and then number two, if they're keeping the loans and servicing it due to the fact that they can't transfer it anywhere else, they're experiencing the same problem servicing companies will have to with flushing out the cash to pay the investors. And so that's where we're seeing the liquidity problem. And now with mortgage companies and mortgage banks, the reason why we're seeing these guideline changes, we have to kind of think and put ourselves in their shoes. It's a lot riskier to give out money at the moment because job security has never been more uncertain. And we just don't know how much longer this will last. And so to account for that, companies are saying, okay, we'll remain open, we'll still fund and give out these mortgages, but we need to protect ourselves. And we need to kind of take into account the extra risk that is involved now with lending money. And so that's why we're seeing extra overlays and guideline changes. So a FICO score requirement for a program might have been 620 last week, and then now it's 680. These changes are happening frequently simply because the mortgage companies are taking on a lot of risk by giving out mortgage loans already. They need to make sure that the borrowers who are obtaining these mortgages really, really do in fact qualify. And so if you have any questions, if you have or are in a situation where, maybe some kind of guideline change is impacting your qualifying, then yeah, reach out to me. I'd be more than happy to give you a second opinion and let you know if there's a different program or a restructuring we could do to help you qualify. But either way, yeah, I think the most important thing is just stay in communication with your lending professional. Make sure that you're understanding of these different changes and why they're happening, and know that you know, everything is temporary. Once we get past everything going on, the guidelines will come back. They will lift a lot of restrictions, but it's just we don't know when exactly it's going to be. But the good news is we do know for certain we're going to get past it one way or another. We just don't know when.